In recent weeks, the cryptocurrency landscape in the United States has undergone a seismic shift driven by President Donald Trump's renewed embrace of the industry. As crypto companies that once operated in the shadows now find themselves welcomed in Washington, the transformation is exemplified by Tether, a stablecoin firm that has rapidly adapted to the changing regulatory environment. This pivot marks a stark contrast to the previous administration's approach and has sent ripples of optimism through the crypto community. Tether, long scrutinized for its financial transparency and connections to illicit activities, is now making inroads with U.S. lawmakers. Paolo Ardoino, Tether's CEO, recently attended a high-profile lunch with Senate Banking Committee member Bill Hagerty and other business leaders, signaling a newfound acceptance of the firm. "I'm very naive," Ardoino remarked during an interview, reflecting on his recent trip to Washington. There should be a movie on an Italian in New York for the first time at 40 years old. The shift in sentiment towards Tether and the broader crypto industry can be traced back to Trump's administration, which has moved swiftly to roll back restrictive policies that characterized the Biden era. This has included the introduction of new legislation aimed at outlining rules for stablecoins, with Tether actively lobbying for favorable terms. In a stark contrast to previous measures, the administration's focus on integrating digital assets into the U.S. financial system has led to a more welcoming environment for cryptocurrency firms. The ramifications of this policy shift are significant. Tether, which reported profits exceeding $13 billion last year, is now positioning itself to establish a U.S. operation and offer a domestic stablecoin tailored for financial institutions. With influential allies, including Commerce Secretary Howard Lutnick, who previously led Cantor Fitzgerald, one of Tether's major partners, the company is leveraging its connections to reshape the regulatory landscape in its favor. Trump's administration has also made strategic appointments that reflect a pro-crypto stance. Key regulatory figures such as Paul Atkins at the SEC have begun engaging with the crypto community to provide clarity on token issuance and market structure, a move that has been lauded by industry leaders. "This is the clarity we've been asking for," Nick Carter, a founding partner at Castle Island Ventures, stated, highlighting the marked contrast from the previous administration's hardline approach. However, challenges remain, particularly with the Federal Reserve, which continues to impose restrictions on banks engaging with crypto firms. While the Office of the Comptroller of the Currency (OCC) and the Federal Deposit Insurance Corporation (FDIC) have rescinded anti-crypto guidance, the Fed's hesitance poses a significant barrier to full integration of digital currencies into traditional banking systems. Despite these hurdles, the cryptocurrency sector is buoyed by a renewed sense of optimism. CEO of Coinbase Brian Armstrong noted that the current administration is not only welcoming to digital assets but is also pursuing ambitious plans to integrate blockchain technology into the broader financial landscape. This includes discussions around tokenizing equities and exploring blockchain-based payment systems, which could dramatically reshape capital markets. As Tether and other crypto firms prepare to capitalize on this changing political landscape, the industry is looking towards future developments with anticipation. Ardoino's plans to frequently visit Washington underscore a commitment to challenge U.S. crypto firms on their home turf, marking a new chapter in the relationship between cryptocurrency and American regulatory frameworks. The evolution of the crypto landscape is poised to continue, driven by the industry's increasing acceptance and the potential for groundbreaking regulatory changes that could redefine how digital assets are integrated into the financial system. The coming months will be critical as the industry navigates this transformative period, with all eyes on how legislation and regulatory frameworks evolve under Trump's administration. As the cryptocurrency market gains momentum in 2025, Bitcoin is at the forefront of this resurgence, inching closer to the monumental $95,000 mark. This latest surge has captured the attention of investors and analysts alike, raising questions about whether Bitcoin will soon breach the elusive $100,000 threshold. Alongside Bitcoin, altcoins such as Ethereum and XRP are also showing promising growth, creating an overall sense of optimism in the digital currency landscape. Bitcoin's ascent can be attributed to a confluence of factors. Institutional interest in cryptocurrencies continues to rise, with more organizations recognizing Bitcoin as a hedge against inflation and a store of value in uncertain economic times. Furthermore, as the market cap of Bitcoin approaches the $1 trillion mark, the digital asset is becoming an integral part of the global financial ecosystem. Analysts suggest that as demand continues to outstrip supply, Bitcoin's price may very well venture even higher, with some projections hinting at a future surpassing $100,000. Ethereum, the second largest cryptocurrency by market capitalization, is also holding steady. The platform's transition to Ethereum 2.0 has enhanced its scalability and performance, further solidifying its position in the decentralized finance DeFi sector and among developers. The growing number of projects leveraging Ethereum's blockchain for applications ranging from decentralized apps to tokenization has kept its momentum strong amidst a competitive landscape. Meanwhile, XRP remains resilient despite ongoing legal challenges with the U.S. Securities and Exchange Commission (SEC). Its primary use case in facilitating cross-border payments continues to gain traction among banks and payment providers. Ripple's strategic partnerships and XRP's low transaction fees contribute to its sustained relevance in the financial sector, appealing to institutions looking for efficient alternatives to traditional banking systems. In the broader cryptocurrency market, other players like Binance Coin, BNB, Solana, SOL, and Chainlink Link are carving out their niches. BNB has seen significant growth, benefiting from its association with one of the largest cryptocurrency exchanges and its expanding use cases within the Binance Smart Chain. Solana has emerged as a favorite for developers due to its high throughput and low transaction costs, while Chainlink remains a critical player with its decentralized Oracle network, providing essential data connections for smart contracts. The excitement surrounding Bitcoin and its counterparts is not without its challenges. The cryptocurrency market experienced turbulence earlier this year, but a rebound was noted towards the end of April, fueled by positive macroeconomic developments. Comments from President Trump regarding trade negotiations with China and the potential for the Federal Reserve to resume rate cuts have instilled a sense of optimism among investors, leading to a renewed interest in cryptocurrencies. Looking ahead, the cryptocurrency market appears poised for further developments as institutional interest grows and technological advancements continue to shape the landscape. The ongoing evolution of Bitcoin, Ethereum, and emerging altcoins suggests that 2025 could be a pivotal year for digital currencies. As market participants speculate whether Bitcoin will indeed reach $100,000, the broader implications for the financial ecosystem remain significant, with the potential for new regulatory frameworks and increased adoption. The future of cryptocurrencies promises to be both dynamic and transformative. In an unprecedented merging of politics and cryptocurrency, Donald Trump's recent ventures into the digital currency space have ignited a firestorm of controversy and raised ethical questions that could reverberate throughout his administration. As he approaches the 100-day mark of his second term, the implications of his actions, particularly his promotion of a cryptocurrency dubbed the Trump coin, have drawn scrutiny from legal experts and political opponents alike, suggesting that a constitutional crisis may be looming. On April 23, Trump announced a dinner event for the largest investors in his cryptocurrency, offering them exclusive access to the sitting president. This move has transformed the Trump coin from a mere speculative asset into what some experts are calling a utility coin, a digital currency that provides holders with tangible benefits. Following the announcement, the value of the Trump coin surged nearly 60%, adding substantially to Trump's personal wealth, which is already a matter of public interest given his previous business dealings. However, the implications of this arrangement extend beyond financial gain. Legal scholars argue that Trump's actions could violate the emoluments clauses of the U.S. Constitution, which prohibit the president from accepting gifts or financial compensation from foreign and domestic entities. This dinner has the possibility of being that pushed too far, asserts Jeff Hauser, executive director of the Revolving Door Project, highlighting the precarious balance Trump maintains between leveraging his influence and adhering to constitutional stipulations. The controversy surrounding the Trump coin is compounded by Trump's broader financial interests in cryptocurrency, which were further highlighted during a recent conference in Dubai. There, a significant deal was announced involving a state-backed Emirati firm planning to utilize a stablecoin developed by Trump's firm for a $2 billion investment into Binance, the world's largest cryptocurrency exchange. This transaction exemplifies the ethical quagmire that Trump faces as it ties his private business interests directly to foreign government interactions. Critics have raised alarms over the potential for corruption, suggesting that wealthy individuals could invest in the Trump coin to gain political favor. Democratic Senator Jon Ossoff has already stated that Trump's actions might warrant impeachment, citing the president's blatant financial interests that intertwine with his duties. The White House has remained silent on these claims, further fueling speculation about the legality of Trump's dealings. Meanwhile, the broader crypto industry is experiencing a dramatic shift under Trump's renewed leadership. His administration has pivoted sharply from the previous administration's regulatory stance, fostering a more welcoming environment for cryptocurrency ventures. Appointments of pro-crypto officials at the SEC and other regulatory bodies indicate a significant policy reversal, with industry leaders expressing optimism about the future of digital assets in the U.S. economy. As Trump's administration continues to navigate these complex waters, the intertwining of his political power and personal wealth in the cryptocurrency sphere presents a growing concern. With the midterm elections on the horizon, public perception of Trump's financial maneuvers, especially those that may skirt constitutional boundaries, could play a pivotal role in shaping his political fate. The future remains uncertain as the implications of Trump's actions unfold. Observers are watching closely to see whether the growing calls for accountability will gain traction in Congress, or if Trump's hold on the Republican Party will prove resilient enough to stave off potential repercussions. As the crypto industry celebrates its newfound support under Trump's leadership, the ethical dilemmas posed by his personal investments and the potential for corruption loom large, casting a shadow over his administration's legacy. In the ever-evolving landscape of cryptocurrency, Ethereum ETH finds itself at a crucial juncture, attracting attention from both analysts and investors alike. Despite a challenging year that has seen its price plummet 47% in 2025, Ethereum remains a focal point of discussion, with some experts asserting that it may be undervalued compared to its potential. A recent analysis from trader Donald, who accurately predicted Bitcoin's BTC bottom in 2022, has reignited conversations about Ethereum's growth prospects, positioning it as a top contender in the crypto market, second only to Bitcoin. In a video shared with his 66,300 subscribers on the Technical Roundup YouTube channel, Donald expressed optimism about Ethereum, suggesting that the asset is currently underestimated. "I think people are underestimating ETH just because it's had bad price action," he noted, drawing parallels to the historical performance of Solana, which once faced skepticism but later soared in value. He highlighted that Ethereum's trading pairs against Bitcoin are maintaining significant historical support levels, hinting at a potential breakout as the market stabilizes. As of early May 2025, Ethereum is trading at approximately $1,856, marking an uptick of nearly 2% in just 24 hours. Its performance is juxtaposed against a backdrop of increasing competition, with platforms like Solana, Cardano, and Avalanche gaining market share. These rivals are not only performing better but are also capturing investor interest, raising questions about Ethereum's long-term dominance in the decentralized finance DeFi sector. The competitive landscape is further complicated by internal challenges within the Ethereum community. Leadership changes at the Ethereum Foundation and ongoing debates about the platform's future direction have led to a sense of uncertainty. Notably, Charles Hoskinson, co-founder of Ethereum and now a competitor with Cardano, has warned that Ethereum risks becoming obsolete unless it adapts swiftly to the evolving market dynamics. Despite these challenges, there are glimmers of hope for Ethereum. On-chain data indicates significant accumulation by whales, with reports of substantial purchases totaling over $7 million in ETH in a single day. This buying spree suggests that larger investors still see value in Ethereum, particularly as it has bounced off key support levels around $1,500. Analysts predict that if Ethereum can maintain its current momentum, it could target a price of $2,200, driven by its role in DeFi and the burgeoning interest from institutional investors. Meanwhile, Bitcoin's ascent to nearly $95,000 has fueled optimism across the cryptocurrency market, reinforcing the idea that Ethereum may benefit from Bitcoin's bullish trajectory. Analysts emphasize the importance of Bitcoin as a store of value and hedge against inflation, attributes that may spill over into Ethereum's price action in the near term. With the cryptocurrency market continuing to mature, the interplay between Ethereum and its competitors highlights the need for strategic innovation and adaptability. As institutional interest grows and new blockchain solutions emerge, Ethereum's future will largely depend on its ability to evolve and maintain its relevance amidst a crowded field. In conclusion, while Ethereum faces significant hurdles, the combination of whale accumulation potential, positive price movements, and the ongoing evolution of the broader cryptocurrency landscape may provide the necessary catalysts for a comeback. Investors and stakeholders will be closely monitoring these developments, as the future of Ethereum could redefine its place in the decentralized economy. As 2025 unfolds, the question remains: will Ethereum reclaim its former glory, or will it succumb to the pressures of a rapidly changing market? In the ever-evolving landscape of cryptocurrency, Solana SOL has recently captured significant attention by demonstrating remarkable resilience amidst global macroeconomic tensions. Despite escalating trade disputes between the United States and China, which have left many investors wary, Solana's price surged by 8% to reach around $152, establishing a new support level above $150. This upward momentum raises questions about whether SOL can maintain this trajectory and possibly reach the psychological mark of $155 in the near term. As geopolitical dynamics continue to shape market sentiment, SOL's recent performance stands out. The cryptocurrency rebounded impressively from a low of $140, attributed to a combination of renewed investor interest and a spike in trading volume by 35% over the past 24 hours. This bullish movement aligns with broader market trends, as the CoinDesk 20 index, a benchmark for major cryptocurrencies, also climbed approximately 4% on the same day. Technical analysis suggests that SOL's price action is characterized by a series of higher lows, indicating a sustainable bullish trend. The data reveals that SOL experienced volatility with a significant drop to a low of $150.74 before recovering to $152.49, illustrating a typical V-shaped recovery pattern. The support level at $151.10, bolstered by substantial buying volume, has become a crucial point to watch, as it may dictate the cryptocurrency's near-term direction. Amidst this backdrop, another narrative is unfolding within the cryptocurrency space. The rise of Sway SUI has been notable, particularly in institutional investment inflows. In April, SUI outperformed Solana, attracting $14.7 million in inflows, while Solana experienced outflows of approximately $14 million. This shift in institutional interest has prompted analysts to speculate whether SUI is emerging as the next institutional favorite, potentially reshaping the competitive landscape within the blockchain sector. Juan Pellicer, a senior research analyst at Into the Block, noted that while some capital has shifted from Solana to SUI, the latter's growth potential and newer technology are attracting investors. However, he emphasized that Solana's established market cap of $73 billion and robust ecosystem continue to secure its position in the market. Despite SUI's impressive 56.6% rise in April, Solana remains a dominant force, underscoring the importance of diversification in institutional portfolios. The divergence in performance between Solana and Sway is further highlighted by the contrasting net asset values of their respective Grayscale trusts. Over the past 6 months, the Grayscale SUI trust has seen a remarkable increase of 71.8%, while Solana's trust has remained flat. This stark difference in demand signals an evolving investor sentiment that may favor newer technologies over established players. As the cryptocurrency market grapples with regulatory uncertainties, a coalition of crypto organizations is advocating for a new pilot program aimed at tokenizing securities on a public blockchain. This initiative, known as Project Open, seeks to engage the Securities and Exchange Commission (SEC) in discussions about the potential for greater efficiency and transparency in financial markets. The coalition, which includes the Solana Policy Institute and Superstate, envisions a future where tokenized assets play a central role in trading, potentially transforming the landscape of securities. Looking ahead, the interplay between macroeconomic factors, institutional interest in emerging technologies, and regulatory developments will be crucial in shaping the future of cryptocurrencies like Solana and Sway. As investors navigate this complex environment, the performance of these assets will likely remain a focal point, with potential implications for their long-term viability and adoption in mainstream finance. The coming months will be pivotal as market dynamics continue to evolve, potentially leading to new trends and opportunities within the cryptocurrency sector.